But Asian economies are also facing uncertainties from the Brexit referendum. Our Asian correspondent talked with local experts on their views about the coming vote.
Though a potential Brexit is not a major concern for Turkey at the moment, the country has been put into center focus by many pro-Brexit campaigners lately. As Turkey's EU bid continues, they have warned millions of Turkish citizens would flood into Britain, even though it's clear the membership process is going to be a very, very long one. Turkish Deputy Prime Minister Şimşek, however, emphasized that it is in Turkey's interest to remain anchored to Europe. It's important to note that between 70 to 80% of foreign direct investment to Turkey comes from the EU, so the economic relationship is certainly a significant one. Analysts stress that a Brexit scenario would have some impact, but not a significant one.
In the event of an exit, it's probable that Turkish assets will significantly escalate with weak performance, which may trigger ongoing concerns regarding internal dynamics, such as uncertainties in politics and structural reforms. Otherwise, we believe the global asset price recovery would be temporary, as the global economic and political risks, including Turkey, are likely to come into perspective again at a future date.
Meanwhile, Turkey is also one of Britain's top trading partners, as it supplies 7.3% of Britain's imports. So either way, we expect some consequences, but not one that would destabilize the Turkish economy. Now let's turn to Shanghai in South Korea, where the impact is expected to be much worse.
A Brexit, according to experts here, would deal a significant blow to South Korea's economy, an economy that's heavily reliant on trade. Last year, $48 billion worth of goods were shipped to the EU, and exports to Britain made up 15% of that total. In fact, South Korea has had a free trade agreement with the European Union in place since 2011, and a Brexit would mean having to renegotiate that deal and managing the costs that come with it.
If a Brexit occurs, trade relations with Britain could be restored depending on the 2-year negotiation period between the UK and the EU. The problem is, if conditions in any future deal with the UK are lower than the current level with the EU, trade volume will likely decrease permanently.
Analysts, meanwhile, say a leave vote in Thursday's referendum could lead to volatility in local stocks in the short term. On the other hand, if Britain votes to remain, investors will likely turn their money to riskier assets in emerging economies like South Korea. Meanwhile, over in Australia, concerns over the impact of a Brexit are intensifying. Greg Navarro has more from Sydney.
We are already seeing the impact here in Australia from the possibility of Britain leaving the European Union, the Aussie dollar sliding, then rebounding slightly on speculation the Brexit movement might actually fail. You have to remember there are two forces at work here on the Australian economy. The first is Britain as Australia's second largest export partner, worth about $7.5 billion US dollars. The second is Europe as a direct investor in Australia, which continues to have an increasing impact. But one professor says not to overestimate the impact.
I don't think that'll change after Brexit. I think if anything, Australia-British ties will strengthen as a trading partner, as they have with the Commonwealth. And the Europeans are still going to invest in rocks and crops in Australia.
Economists also believe Britain's exit would strengthen its position as a competitor to Australia. One interesting note to all this, if Britain were to leave the EU, then Australia's head of state, the Queen, would in essence be advocating against the country's best interests. Economists believe that would give momentum to calls for a republic in this country, something that comes up often here in Australia.